So hello everyone and welcome along to this live webinar. And today I'm excited to have Jamie York with us. Hi Jamie, how are you?
Hello, hello. Good. Glad to be here.
And also Amir from our team that will moderate this webinar. If you watch it on our YouTube channel, feel free to subscribe to get more relevant content. So Jamie, today we have a very special webinar. We're going to speak about the property market in general, also demo some of the new features on the Lendlord platform, but we are going also to speak about the AI. I would say, people say trend, but I think it's actually a real tool that can be very valuable for everyone, and I think especially for property investors and landlords. So we just launched an early access to our LendlordAI feature, which we will highlight during this webinar from time to time. Only premium users currently have early access to this feature. We are running, as usual, a promotion during this webinar time, 50% to our premium plan. Amir will put the details on the chat. So if you want to get all premium features with 50% off and get early access to the Lendlord AI feature, feel free to put it in so just upgrade during the webinar time. Um, Jamie, before I jump into the agenda, I think many people know you, but for the people that perhaps don't, or people that just want to get a reminder, if you can introduce yourself, like, in a few sentences.
Yeah, sure. Yeah, hi everyone. Really good to be on. My name's Jamie. I've met Avi a few years back when we started using Lendlord and collaborating on a few things and started using the software more and more. And I thought I need to meet the guy behind this. So I flew over to Israel, got to know Avi and his team really well, and I've just been absolutely blown away. And it's yeah, I just love Lendlord and everything about it, and really want to be as involved as possible to share the message. So for those that don't know me, I've been investing for about 10 years now. Started 10 years ago in fact, it was 10 years as of December the 23rd since my first deal. And much like all of you, it started with trying to educate myself, push myself out there, even understanding what a mortgage was, and how to buy property. And fast forward to now, we own a decent amount of property, around 180 properties as of today. We do a decent amount each year, just over 10 million a year now. And we're just looking to leverage tech a lot more in our property businesses. And frankly, it just makes all of our lives a lot easier. So, yeah, I'm just hoping that I can share some value this evening in what I do and how I've built my businesses within property. And hopefully, you can get some key takeaways. So, yeah, that's it.
I'm sure we will. So let's jump into the agenda quite quickly. Um, and for our uh, audience, just if you have questions, feel free to put them on the chat. Amir will answer as we go, but we will have a session for question answers in the end. Um, so yeah, I think we did the quick introduction. So we speak about the property market and some trends, key trends that we see. I think there is one topic that we also highlight in our website that we can speak the renters bill reform. And then we speak about some best practices, how to source properties, and also speak about how AI can help you identify uh, investment opportunities and also help you with the analysis of deals using the Lendlord AI. What makes a good deal? So, Jamie, I basically want to ask you, like during this webinar, like from your experience, what you see, and perhaps you can provide some tips to our audience. Then we will do a live deal analysis. We do like step by step using the Lendlord platform. Um, and then we will highlight the Lendlord AI feature. And in the end, we'll have a question and answers session. So we have um, a lot of things to discuss. And perhaps we can start with the recent changes in the market. I will ask you, Jamie, how do you see it? Because you're actively investing in property. There is a new government. There are some reforms are coming in. Um, Interest rates start, like there was a cut last month. I think this time stays the same today. What is your take about what's going on right now in the property market?
Well, we're seeing a shift, first of all, and we're seeing change. And change is really exciting for those people that are educated around it and terrifying for those people that aren't educated around it. So, if you think about Labour coming in, have Labour been property investors' best friends since they've come in? I would say that is no. The irony is, and I'm not here to talk about whether you're pro Labour or against it, but I'm just going to talk what I see as the fact. So, ironically, with Labour, who I see that they do want to represent is maybe the more working class, maybe people that need a little bit more financial support. But a lot of their changes actually negatively impacts those very people, including renters. So, for example, one of the things that they've done is stamp duty increases. And by the way, there's another one coming in
Mark.
11. Yeah,
Mm.
and yeah, first of April there'll be new
Yeah, yeah.
stamp, and obviously EPC changes with these changes coming into play. Now, the thing is, that's nothing to be worried about if you know how to navigate it. The big thing that we're seeing from a lot of labor changes is a lot of people in markets for buy to lets. They're selling off a lot more down in central locations such as London and things like that because of the higher purchase prices, Renters Reform Act coming in, EPC changes. And the impact of that is it puts upward pressure on property prices that are below the median house price in the UK. So the median house price in the UK right now is about 280. Depends on where you're getting the data, 280 to 310. So let's call it 280. Now that's the UK average, and each area will have their median. Okay. So then what happens is if in general, median prices, they all go up property prices over the long term, like just basic inflation. But those that are below the median, when there's a big boom and prices are going up, those below the median tend to go up a lot faster. Okay. And then in when there's a recession or change, the ones that are below the median are shook a lot less. Think of it as the tree trunk. And then the further above the median, house price median, is like the leaves on the tree. Like when the wind blows hard, everything gets impacted, but the trunk of the tree gets impacted the least. So a lot of these changes that are coming in, such as stamp duty, renters reform, what does it impact the most? A lot of the leaves on the tree. Basically, London property prices will see an impact. What you'll probably see in the news articles 2 weeks after the stamp duty change is record number of properties pulled out of last minute, and it will be in London. The thing is, for northern properties, let's say our average purchase price in our locations is about 130, 140,000. Well, the stamp duty change that's coming in doesn't impact anything until it's over 125,000. So let's say 150k property. As of today, the stamp duty will be 7,500. As of the 1st of April, it'll be 8,000. So it's £500 difference. It's not enough to impact somebody buying a deal. But if you think a £500,000 house, which is roughly three times more, obviously a bit more, so a cheap London flat, that's going to be £40,000 stamp duty as of the 1st of April. That is a huge cost implication. And a lot of people go, oh, yeah, but they're buying a £500,000 flat. It's like, no, people tend to buy things at their upper limit. And so people that pay the most are homeowners and people buying, not investors. In our areas, when we secure a property at 140, we're competing with people offering 152, and we only get them because of the speed and certainty. So it's really going to impact the upper market. Then what's going to happen, and we'll see this within the next 6 months, a lot in our areas is property prices having another surge. That's good for if you're getting into the market. It's not so good if you're getting ready in 12 months' time, right? It's harder for everyone. So that's the labor impact. Then what's happening is the interest rates. And so the interest rate's staying the same. Why have they done that? Well, the reason why is to create some certainty and stability. And a big decision of why they've stayed the same is because of the uncertainty in the world. Actually, one of the biggest reasons they did it isn't to do with the UK, it's to do with America. So you might have seen Trump talking a lot about the Internal Revenue Service, and he's like, why have we got so much tax internally but no tax externally? And so he's talking about the External Revenue Service, and a lot of Europe and the UK and every a lot of people that are trading are waiting to see what these tariffs are going to look like because in the UK, we're a big import and export country, and America is a big part of that. And so, what they're trying to do is stabilize that. Now, it will impact the economy, whatever charges the ERE, External Revenue Service, ERS will do. But again, what does that cause? Change. What does that cause? Opportunity. And what you need to understand, this is some basic level economics. When there's fear in the market, which there will be when the tariffs come in, there's two big things investors tend to store their money in: gold, okay, gold, and property. And because of the stamp duty, where's that money getting directed? It's going to be mainly northern cities. Um, and that's that prediction on there. There was something else I was going to mention, but it's completely gone from my mind right now. Oh, renters reform. So renters reform has come into play. And again, it's one of those where like EPC changed and all of that. People go, oh my God. It's like the devil's in the details. It's really not that big of a deal. So just so you understand, like some changes, you can increase your rents once a year, and that's going to become a thing that comes into play. Well, 99% of landlords, that's what we do anyway. You're not looking to change rents every 3 months. And yes, it can only be in line with market value. It's like, great, that's pretty normal anyway. That's supply and demand economics. The other thing is when you serve a Section 21 when somebody's not paying, okay, when they're not paying, you serve a Section 21. 2 months later, you serve a Section 8, which is starting the getting a tenant out process. Now, with the new reform coming in, you're going to have to wait 3 months. Again, why are they doing that? To reduce a bit of strain on there, and they're investing heavily in the court process to alleviate and increase the speed of eviction. So it's all very positive moves, but that change creates fear. Who does it create fear for? Landlords. And then when you've got the old school landlords, back in the day where there was no Section 24 and nobody declared their taxes because they owned it all in their personal names and everything like that, where they had maybe what we would call the heyday of property investing. And so what happens now is a lot of the old school landlords go, do you know what? I'm about done. And so what happens then is the availability specifically, not of property stock, because that doesn't really go up, by the way, because it gets satiated with the demand. And just so you know, as of today, there's a 1.5 million unit housing shortage in the UK. So when people talk about affordability in that, it really isn't an economy that we need to talk about. But from a private rental sector, the availability of stock reduces, but the demand for rental hasn't reduced. And so when demand is over supply, what does everyone on here think happens to rental prices? Does it go up or down? It goes up. And so then you can see the cycle: availability of rental stock down, demand for rental stock up, people selling off London stock, which will increase rental prices even more. And it's like, how can they increase it much more? Investment in the north goes up, prices go up, rentals go up. And so that's a bit of a download of the economy. And all of that happens from somebody ironically trying to protect renters and kind of screws them over a 12-month period. But hopefully, I communicated in a way for people to follow along and help you understand that when a domino gets pushed here, That's why this happens over here.
Oh, that was a great pitch, I would say, Jamie. And regarding the renters right bill reform, we just launched on our website. Let me share the screen. A news hub regarding this reform, where you
I read that, Avi. Yeah, I don't know who did that for you. That is one of the best write-ups on it that I've read. It's really good. So whoever did that, just give them my compliments.
we have like someone in the team that is in charge of this news hub, as in top is on top of everything, and we also release weekly updates. Our premium users will start to receive the weekly updates on a weekly basis. But if you want to learn more about this reform, um, you can just go to our website. It's on our blog, or just search for Landlord's Renters Right Bill News Hub, and you will find it on Google. Um, and of course, if you manage your properties on Landlord, the goal is to make sure that you stay compliant, and we will implement all the things that relevant to this reform, um, starting, with the new AST generator for the new tenancy agreements. Then, alerts in terms of things that you need to take care of in terms of the compliance of the properties, and also in terms of tenants. We do have the tenants dashboard, and so when you invite the tenant, you need to share some documents about the property so you can do it use Landlord. The messaging system is important as well, because I think in the newer form there is also a thing that speaks about the communication with your tenants. Like they will like SLA on the times that you need to respond and things like that. So the Lendlord platform will help with that as well. And I think just before we continue with the agenda, just want to remind you about the promotion of today. So if you want to use all the premium features of Lendlord and get our early access to the LendlordAI feature, go to your settings page, and we have a special coupon code just for this webinar time. Click add coupon, then here type Jamie 03 03 for March. Then click apply, and you will get the premium plan for £49.5 for the first year only. It's usually £99 or £12 per month. And you can get great set of features. We will highlight some of those features. Okay, so Jamie, the next topic basically is how technology and AI influencing the property market. Um, Before I will let you answer, I want to show that for premium users, we have now early access to the Lendlord AI feature. We will use it. And basically, it's kind of an assistant. It's connected to your Lendlord account, and you can query your account, summarize things, phrase emails and text, compare items, estimate refurb costs, GDVs, and also learn things about the property market. So it's a great feature. It's still in beta phase, so we would love to get your feedback on it. And if you subscribe to our premium plan, you will get an early access to this feature. Jamie, how you see, like, it's interesting for me how you and your company now use AI tools, and how do you see like the future of technology? We speak about technology for 3 years, and like you've been part of the feedback that we received to develop this platform. So how do you see now the new, it's not a new trend, but it's evolving and now like getting more traction, the AI trend?
Yeah, I think the biggest shift that's positive for all of us on here is the AI shifting from B2B to B2C, so business to consumer. And, from a business point of view, even like say, for example, you could have it where if you can use Lendlord to host your properties and have payments going in. And then when a tenant is paying, you can have it automatically reconciled. Or even, for example, when you've got a property to rent and you list it, you can have a set of five, say you wanted a tenant to have these five things, you could have AI qualifying all of those tenants and only doing viewings with people that qualify for those, but you don't need to talk to anyone. Instead, the bot or the AI qualifies them. Voice AI is really becoming bigger and bigger right now, where actually you can have a conversation with AI and you can say, hey, I'm interested in this. Oh, great. Let me get some details for you. Oh, here's a bit of a download. What do you want to know about the property? And you can do all of those sort of things. I think the level that tech is going, it's pretty phenomenal. And the more conversations I have with people in AI, whether it's having a conversation with an AI bot, and it's like it's all very streamlined enough where it's usable, but also like it's obvious you're talking to an AI, right? But what's interesting for anyone that's been using even Chat GPT, which is like the core foundation, if you like, if you used it 2 years ago compared to a year ago compared to now, how fast it has developed is absolutely insane. And what's interesting is it's learning. I don't know what the exponential rate and maths behind it is, but it's consistently learning and learning billions of times over every single day and developing. And what's really impressive when you think about AI and the utilization in a business is not where it is today, but where is it in 6 months? And I don't think many people could genuinely predict how amazing it will be in 6 months or 12 months. And I say to my team that you don't need to be worried about AI replacing your job. What you need to be worried about is somebody in your job that knows how to utilize AI because genuinely, let's say a sales negotiator that has absolutely utilized AI will be worth five sales negotiators to the business. And then as a business, I think like that. AI is not going to make my sourcing company, for example, out of business. But a sourcing business, and for those that don't know, sourcing, we scout other people's portfolios for them because they don't have the time, the knowledge, etc. And we utilize AI heavily to find the best properties on the market. And it's not that AI will ever put us out of business, it's the businesses that are competing with us that don't utilize AI, they're going to be out of business in the next year or two. And then when you apply that to property, and think about the customer experience for your tenants, your agents that you might use, and everything else, and even getting access to the right deals, you as a property investor will be out of the market because how could you possibly compete with these people that are able to, like, eventually you will be able to get a property, run it through the AI, and it tells you based on your criteria what it can offer, and it will put an offer pack together, it will send it out in the post, it will put everything in place. And eventually AI will speed up the legal process, everything. And so it's an absolute game changer. And what I love about Lendlord is you're not, and I'll say this in the nicest way, you're not trying to reach perfection from day one. And I mean that in a real positive way, is that you are at the forefront. You're willing to go, hey, I value our premium users, and so I'm giving you beta access. And a lot of companies don't even do that. They will test and test and test in the background, but the thing is, Lendlord's already 5 years ahead of everyone else because of that ability. And so that's what I think you need to be like with AI. You need to be trailblazers. You need to be willing to go all in and take this risk. And I think that's the exciting thing right now with you guys introducing AI and playing around with it is an absolute game changer. And what's for those people that don't know about AI and learning models, the more you use Lendlord's AI more and more, and it will ask you for feedback and it automatically learns. And so the next time you use it, it already knows you. It knows the impact of it. And that's something I am incredibly excited about.
Yeah, we too. Thanks, Jamie. And yeah, it's one thing that I need to mention is that um, the Landlord AI feature. Perhaps I will, perhaps I will show some things about it now. It's connected to the account, but it's basically like the training is on the dedicated account. So like the training is not being shared to the public, so you don't need to worry in terms of security, I mean. Um, but basically, you can query things about your own account. Let me show one example. For instance, if let me see which account I'm in. Okay, let's go to my portfolio. Can go to a specific property, and then I click on the LendlordAI icon, and I can start with summarize this property for me. So it takes the data of this property, issue here, um, and the nice thing that I can ask follow-up questions. We also connected it to, so if there is information that that the assistant, the Lendlord AI needs to, it looks like in the demo we have a problem. We try again, but if not, I will switch an account. But what I want to say is basically, if there are information that the assistant needs to get from I will change to a different account, from the web, for instance. So let's say if you want to ask for a specific property or like postcode, area, trends, costs, building costs, things like that, it will know to go and search, for instance, Google, get some more sources, and then factor into the answer of the AI assistant. Um, Let me try here. Second. Okay, I think I will try to make it work, but in the meantime, I think we can start speaking about the next topic. So next topic is sourcing, best practices about sourcing. I think we discussed it in previous webinars, Jamie. Um, Hopefully I will be able to demo the AI to also to show how you can use AI for that. But Jamie, for me, it's interesting to hear from you if you have new best practices, and also what are the best practices you use to source, to find the right properties to buy at the right time, at the right price, at the right location.
Yeah. So I think that's it. It's that Warren Buffett quote comes into mind where it's like time in the market will always beat timing the market. And it's so important with investment fundamentals, and it translates to businesses, to property. The biggest mistakes that I ever see people do is trying to focus on getting discounts on properties and stuff like that. And don't get me wrong, like it's nice to feel like you got a good deal, right? But the reality, I've done it before, by the way, where I used to get some properties at 25% below market value. Guess what? I can never sell them because the only ever people that would want to buy them in these areas want a 25% market value because they're in shit areas, right? And so price is what you pay, value is what you get. And so the reason I like that Warren Buffett quote of time in the market always beats timing the market is you can always tell a loser in the market. And I don't mean they're a loser as a person, but somebody that's going to lose in the market that would pause buying. And that's the thing, when interest rates are a bit higher, or I'm going to wait until they come down. When interest rates come down, oh, the market, why are interest rates down? To stimulate the economy, which means the economy's slow. Oh, no, I'm going to wait for the economy to pick up. But when the economy picks up, then people are paying above market value to get the properties. Oh, no, I'm going to wait for it so it's less competition. Then there's less competition. People go, why is there less competition? If people don't want to buy it, why would I want to? And so you can always tell those people are going to lose. And I talk to a lot of investors that come up with all the BS in the world because they're just surrounded by fear. But of course, they have ego and insecurity and they don't want to acknowledge that a lot of the time. So a successful person investing in property has a long-term mindset. And so think about it. If you guys are buying buy-to-lets on here or HMOs or whatever you want to do, when are you looking to sell them? Well, the smart investor, honestly, unless it is a flip, for example, where you're buying to sell it, if you're buying a buy to let, your exit should be death. Like it really should. Because if you're smart, you should never, if they're a good investment today, it's a good investment in 20 years. Why would you ever sell it? You only ever increase your debt levels. And that way you increase your debt levels as rents go up so that you can take money out tax free and then your kids inherit it and then they hopefully you educate them and they do the same, right? So with that in mind, what are good practices with investment? Well, good practices in investment is to focus on high demand, high value areas for your area. I'll give a great example. I will buy properties at 160k, 140 to 160, and I will pay market value. Now, those same properties last year, I was paying, let's call them 150 grand today. I would be paying 135 grand. But 5 years ago, I'd be buying them at 110 grand, really trying to get them at 100. 5 years before that, they were selling like 60 grand. The thing is, you'd go, oh my God, at 60 grand. And when I was buying them at 60k 10 years ago, people were going, why would you pay 60? You go round the corner, you can get some really cheap stuff for 50, 40, or 45 grand. Problem is, those 50 and 45 grand areas that I could have bought for cheaper, now they're maybe 80k, and that's fine. But I'd rather have the 60 that is now 150 and going on there. And so if you're thinking of property, you need to get into the mindset that it is the long-term game. And then if it is the long-term game and you got into that mindset, you would understand that it's not about trying to get the cheapest price today. You'd understand it's about what do I need to pay to get access to the best properties in the best area. And if you look at anything, and on Lendlord's analyzers, they're really good for this actually, not just doing year one returns, it's 5 year returns, 10-year returns, 15, 20-year returns. You're quickly going to see that your money isn't made in property with getting a discount, and your money definitely isn't made in property from your rental income. It's like most of your net wealth increase will come from capital growth. And that has next to nothing to do with the bricks and mortar. It has to do with the land that it's on, i.e., the area is everything. So all of your decisions around investment for me is where's the land? Where's the demand in the land? And where's the wealth? And you can see from that, that's a great example. Look at the gap in that green and the growth that goes up. That's where the real money is. And it's also tax-free money, by the way, that you get access through debt leverage. Whereas rent, let's say you're a high taxpayer, by the time it comes to you, you've paid 50 pence for every pound that's going through. And so all of the policies that we have are anchored around how do we utilize tech, data, AI, and almost all of our efforts are going into how do we get more and more accurate analysis on what that capital growth is going to look like. And that's what's exciting for us and should be for everyone that's watching this.
Great. And we will do shortly like a live example of how you analyze deals and what basically are the metrics you need to look at. So in the meantime, I was able to get some answers from the Lendlord AI. So let's go back to the example. Okay, so if I'm in this property, I asked just to summarize this specific property so I can get a summary based on the information I have. Then I can ask now follow-up questions, and it can be related to my own data or about the area, for instance. So I can ask, does the value of this property match the prices in this area, for instance. And then basically what happens in the background is that we use different APIs of yeah, I think that we're going to struggle this webinar thing. I'll give it another try. In the meantime, let's see here. Okay, this is another example of a summary that I got on a specific property in my portfolio. Okay, so on the other property, so now I got some information about this area, property valuation analysis, and then I can continue to ask more questions. I also get some recommendations. Perhaps can you give me a breakdown of prices or flats in this postcode? And I can give him postcode as well, just in case. So this is basically on a property that I own. When we start to analyze properties, we can ask questions about the analysis and about the metrics that we get, and also to get some comparison. Okay. All right, so here I basically get a breakdown of prices of flats in this postcode. What is the range for 1-bedroom flats, 2-bedroom, 3 bedrooms, some insights and more. I can also compare two of my properties. If you ask me which properties I want to compare. So again, for premium users, you should have this available now, so you can log into your account and start testing it. And again, we'd love to get your feedback, because with your feedback, we can enhance the way it answers. So we basically get comparison of two of my properties and some insights. And if you want to get early access to this feature, you need to be one of our premium users, and then on Sunday, we will activate your early access, but you need to subscribe during this webinar time using the coupon code of the 5%. On our premium plan, you can get more. So if you want to source properties and you want to get the full address, for instance, or if you want to get more information, you want to add properties to your watch list, you also need the premium plan. If you want to apply sourcing alerts, and again, in order to get the premium plan, click on the link that Amir shared on the chat, click add coupon, then type Jamie03, apply, and you will get it for 50% off for the entire year, for the first year, and then it will go in the second year to 99. For existing premium users, just leave the chat on the chat your email address, and then we will apply the coupon code for your renewal. Yeah, and we have many other features on the premium plan, but we will continue now with the agenda. Okay, Jamie, next question. What makes a good deal? We will analyze the deal, so basically we can speak about the metrics, but I'm keen to hear your thoughts, basically.
Yeah, so I think what makes a good deal is it's really subjective, so a tough one to answer. It really depends on what your criteria is and what you're looking to achieve. So, for example, a, a big mistake that people make from buy to lets is thinking that you're going to quit your job from buy to let property. It's very, and I think a lot of the education and companies out there maybe sell buy to lets as a way to quit your job. Now, don't get me wrong, property can help you quit your job, building a property business can. Buy-to-lets aren't going to do that. Like, in fact, there's an interesting statistic. Well, I find it interesting being the geek that I am. You will sooner become a net worth millionaire before you make 10 grand a month from your buy-to-lets. And I find that quite interesting. Like, you will become a millionaire net at like net worth, not a million of property, before you earn 10K a month. And that's really interesting. So first of all, you need to understand why you're investing. And for me, it's all about increasing that net worth. Because it's not about the cash flow for me, because otherwise I'd do something like rent to rents or rent to service accommodation. So I'm really looking at that long-term value. The next thing is that criteria that makes sense for you is going to be dictated by local economics. So let's say, for example, we're looking at yield. Well, yield is one defining factor of that. Yield in itself doesn't really tell you what returns you're getting, by the way. Yield is a very simple calculation, which is your yearly rent divided by the purchase price. So if your rent over a year is £10,000 and you bought the property for 200,000, that's a 5% yield. 10,000 divided by the 100k, 200k, right? So yield is that. And you get people going, oh, yeah, but what about stamp duty? Yeah, that's great. It has nothing to do with yield. Like, yield is a factual number, yearly rent divided by that. And it tells you your percentage yield. Now, in London, you are going to have very low yields. And the reason for that is property prices in London are staggeringly high. And whilst rents and purchase price do have a positive correlation, i.e., as the value of property goes up, the rent goes up, they're not identical correlations. So it's not like a 100k house rents out for £500 a month, 200k rents out for £1,000 a month, 300k is 1,005. It doesn't work like that. And so when you get into London, the returns are actually terrible. And so really the only thing that London has going for it is the long-term capital growth. That if you said owning property in London for the next 40, 50 years, will it be up? Yes. I think not many people would say no, it's going to be down. But the growth over the next 10 years is going to be very restricted in comparison to the last 20, let's say. But that doesn't make it bad. It depends on what you want. And let's face it, most people around the world, if they invest in the UK, what's the most logical place for them to be investing? It's probably London. So I'm absolutely not saying that London is a bad investment. Whereas if I go to Sunderland, for example, in the northeast, it's probably not crazy for me to find 9% yield properties in there. Okay. It's going to be very different, but the capital growth potential maybe isn't as high. And so for each area, the key figure that I look at is ROCE, the return on capital employed. A lot of people not so much in property actually, but investment, everyone should write this down, internal rate of return, the IRR of property. In investments, that is really the only figure that I actually care about. And honestly, most people have never even heard of internal rate of return. And it kind of has a bit of a complex equation, but ultimately, that is your true return on that property on an annual basis. And for me, if you can get an internal rate of return of 13% or more, it's certainly a very good indicator that that is a solid investment. And if I can get 15%, it kind of gets into that no-brainer territory. And that is taking account of some inflation, it's taking account of rental adjustments over time, it's taking account of price increases over time, everything that you need to know to make that savvy return. And then you compare that. That doesn't mean it's 15% a year in your bank account. It obviously shows in many ways, but you compare that to having your money in the bank account and imagine saying you're getting a 15% return in your bank. It doesn't happen. And so that is really something that's very exciting. And by the way, that's an IRR on your initial investment. So your return on your initial investment. Once you refinance in 5 years and you've pulled out all of that,
Yes.
IRI kind of becomes irrelevant because your return then is infinite return because in 5 years, all of your money's come out and probably and some. So, yeah, ultimately, an internal rate of return, which is taking account of capital growth, everything in once. That's something that's really exciting for me.
Yeah. And Jamie, I think perhaps we can discuss a bit more about the IRR metric and about other metrics, and we can start with now analyzing a deal. Um, I would perhaps we can do the BRR strategy because basically it's a combination of buy to let for the long term, but it starts with a refurbishment project usually. So you need to improve the property in order to add value and then refinance at a higher level and then get some money back. So I think we can do this. So we will pick like random address and random numbers, but I want to speak about the strategy and like the best way to take a look on a VRR deal and then perhaps discuss the buy to let aspect of this deal.
Yeah,
Uh,
sure.
yeah.
Sorry. So you want me to talk about the key differences or?
Yeah, but actually, yeah, we perhaps we can start with that. So on the deal analyzer that you have on your Lendlord account, we do support the three different strategies. So we have the buy to let, flip, and BRR. You want quickly, Jamie, to speak about the differences between buy to let, flip, which is buy to sell, and BRR, which is buy, refurb, refinance, and rent.
Yeah. So yeah, the kind of is what it says on the tin, but a buy-to-let property is one that you're buying and you're more than likely going to put some money into a refurbishment no matter what, even if it's tarting up the property, um, new carpets and a paint, a few grand. Um, but the idea of a buy-to-let is the speed of the return of your investment. Okay, the speed of your return of your investment. And so once you get the money in, it's is coming back to you as fast as possible. A buy, refurbish, rent, refinance, or often known as a BRR, buy, refurbish, refinance. What you're doing is you're adding more of a refurbishment, so it might be 20, 30K, with the idea of increasing the value. Now, typically, BRRs are more prominent towards the bottom of a market. So when there's been like a dip in the market and it's picking back up. And the reason for that is people can buy really good deals at the bottom of the market, plow some money into refurbing it and refinance it at a higher price to pull out a lot of your money. Nowadays, that's less and less common because of the high demand in the property. So the pros of a BRR is that you can buy something, get some money into it, and refinance it fast, and you leave less money in the deal. The challenge is you can't use a mortgage to do it, or legally you shouldn't. Some people might do, but legally you shouldn't. All right. So you can either buy cash 100 grand plus 20 grand, and it's a huge amount of investment, or bridging. The problem with bridging is you need to have confidence in it. And again, like the thing with brokers using bridging and that, they're not as quick as you think all the time. And again, being open, and obviously we're here to sell Lendlord and what it's about, but genuinely what I do love about Lendlord is how bloody quick it all is. In fact, most of the time when I talk to Avi, he's like pissed off at me because of my side going too slow. It's like you click the button, here's the money, take it. And it's like it's really interesting. On that, which is really good because the one thing I want when I'm using bridging is speed and certainty, and that's something that's really cool. Now, the downside of a BRR is risk. Well, two things. Number one, money is going out for a lot longer than coming in because of the gap in the refurbishment and stuff like that, and obviously cost of bridging, but also the risk. You need to be really confident on that end value of the property because if it doesn't value up, last thing you want on bridging is to get stuck on a bridge. So this is where accurate data and analysis really comes in. Whereas a buy to let, you buy it, you set it and forget it. And that's what I quite like about it. And honestly, I would say 80% of my purchases are the straight, boring, vanilla buy-to-let properties, and maybe 20% are the BRRs. And that's simply just a representation of how hard it is sometimes without this sort of software to find those levels of deals. So what helps with Lendlord is you can put in your criteria, it narrows it down, and you can sort of negotiate with a fishing rod, if you like, rather than casting this net out all of the time, which is kind of what you come across. So they're the differences between the two. Both have their benefits and some have their drawbacks.
Yeah, and there is also the flip, which is just buying a property, then renovate, perform some refurbishment, and then instead of keeping the property and refinance it, basically you just sell it at for a profit. And here again, you can either use bridging finance, as mentioned, Jamie mentioned. It's very hard to get a mortgage if the property is not habitable, so you cannot get a tenant inside. So you will need either to use bridging finance or cash. Um, and then again, I think bridging, as you said, it's a good tool if you want to do quick purchases, get advantage over other investors, also do some auction purchases and things like that. But you need a very clear plan and very clear exit strategy. You need to be on top of things and make sure that you can complete the refurbishment on time and get enough time to exit. Either it's a refinance with a buy-to-let remortgage, or with selling the property. On Lendlord, you can find options from various buy-to-let lenders. You can also get your um, mortgage illustration online. So if you analyze a deal, you can click on the finance this deal option. And here you can see we have a live feed of mortgage products. So you can start the process or just select the rate to your analysis. And if you're interested in bridging, you can start the process to get, basically it's just an inquiry. There is no obligation, but you can get your heads of terms. Usually the same day we can do it. And now in the system, we have a promotion of valuation free by the end of the month. So it's quite quick process. You just need to answer some questions, and then you will see um, the terms. You will get an online application also for mortgages, so you can track all the steps through completion until you get the funds. Yeah, so now, Jamie, let's do one exercise, and then we will use the LendlordAI to help us with the analysis and perhaps do some comparison of two different deals.
Mhm.
Um, so let's start with a BRR strategy. So I'll just pick any address. Purchase price, let's do 100 just to make it rounded. But it's important to know that you can run using our API to property data estimation for a specific property based on key parameters that you need to enter. Soon, we are going to launch a feature that you will be able to link to copy a URL from Rightmove, Zoopla, or on the market, and then we will get the information for you. But you can run on the premium plan unlimited estimations. So use the coupon code to upgrade to premium during this webinar time to get all the features. So on the premium plan, you can run unlimited estimations. You can also on the buy to let estimate the rental income and get more like basic indication about the rental prices in this area. Okay, so in the BRR, one thing about the sourcing pages. So if you don't, if you want basically a combination of Rightmove, Zoopla, and on the market in one place, you can go to the sourcing tabs of Lendlords. You have on-market properties. Every day we get new properties from estate agents. On our PM plan, you can also contact the agents, get more information, estimate the rent, and value it to a watch list. And also we have auction lots from many auction houses all around the UK. And in the premium plan, you can also start the process to place bid to win this property. And you can also start the analysis from here. So you will get some metrics if you want to use it as a buy to let or as a flip. And then if you click adjust, it will take you to the deal analyzer with all the details already here. But for this example, we'll start from scratch. So first you need to select the address, then the strategy, we will select BRR. So in BRR, I'm purchasing in 100K. What would be the refurb cost, Jamie, roughly? So I think it's always a game between the GDV, how much you want, how much value you want to add, and then how much you need to invest. And I think with this analyzer, you can understand if it's worth it or not.
Yeah. So a bit of guidance on BRRs. So two things I would say is number one, get out of your head this expectation that you're going to pull out all of your money. All right. It's just unreasonable. But always try and negotiate, So let's say a property's got an end value of 150,000. Well, if it's 150,000, the end value, what you want to have in your head is, okay, if you wanted to pull out all of your money, then 75% of that is the debt that will come off the mortgage at the end. So 75% of 150 grand is, well, I'm gonna get this very wrong, I feel.
Yeah, no,
No,
you have Lendlord for that. So the
yeah, 112. There you go, 112,
with 500.
So you got
So see,
112.
just to keep the pace before like you speak about the metrics, I just want to say how you get to this point on Lendlord. Just put a purchase price. You can start with any refurb cost or use the Lendlord AI to estimate refurb costs. We'll do it after that. Then just define if you are going to purchase it in cash or with bridging. And then what will be the GDV, the after refurb property value, and the rental income after refurb. So after you renovate the property, and then the refinancing would be with a long-term mortgage, buy-to-let mortgage, or you want to exit the bridge with cash. Then now you can see, Jamie, the med, so you can adjust and optimize. You have the purchase price, the refurb cost, the GDV, and the rent, the rental income, and basically how much cash you need to invest. You have the breakdown here. So you need to put the deposit, stamp duty, closing costs, refurb costs. You can always go to the summary and edit the information because we put some assumptions based on our models. But for instance, if you want to change the closing costs, you can click on the edit icon and let's say that you need also to pay an agent or you have any other fees that you need to pay, you can include them here. You can also create an enhanced working plan. We'll not do it now on our premium plan. And then you can see the results, and then the money left in the deal is after the refinance. So you do the project, you complete the renovation, you improve the property value, and then you remortgage at this level. And by remortgaging at a higher value, you exit your bridge that was, in this case, 75K, and also get some capital raise that can pay back some of the refurb cost that you had and the other costs. So in this example of 100K purchase price, 220K refurb cost, 150 GDV, 795 rental income, you were able to invest only 28K eventually in this deal. And then we will calculate all the metrics on these numbers. So the return on capital deployed and the IRR will be on this. So yeah, so Jamie, take it from here. I just wanted to demo how you can get to these numbers on Lendlord first.
Yeah, and that's a great example there where it's like, okay, that's really good. So if you look at that 28 grand left in, you're making a couple of hundred quid a month, which is nice. Your yield's at 7%, which is really solid. And your year on year cash is 9.93%. And if we sort of look at the longer term metrics, you can see how that turns up with an IRR of 23.15%, which is absolutely insane. So it's phenomenal returns. And a huge part of that return, if you look at that long-term ROI, the 476%, is £134,000. And that's over is that a 10-year period?
Yeah, it's a 10-year, but we can change it to 20 years. Then we'll see.
Yeah. And it just becomes like this is a really powerful
Yeah.
um presentation in there. So
Maybe it's worth to say that we take the default scenario is, as you can see, you have different scenarios. So the default scenario, we take the property value appreciation year over year from the postcode. So basically, we have the average yield and we have the 5-year growth.
mhm.
But you can always change it. So let's say if you want to put, 4% in the default scenario, you can change it. Also, the rental appreciation, the annual inflation, and the occupancy rate. Um, then you can define a best case scenario. So let's say that you think that 7% property appreciation growth of the property value year over year, 98% occupancy rate, 4% rent appreciation, and 2% inflation. And you can also define a worst case scenario. In the worst case scenario, you can say, okay, only 90% occupancy rate in the worst case, 1% year over year growth, only 1% rental growth, and very high inflation. And keep in mind, it's an average of 20 years. So like 5 years inflation like it's really bad scenario. And then you can see, okay, in the worst case, what would be my IRR and ROI versus the best case and the default case.
Mm.
So I think this is like another way to
Yeah,
do
I,
the,
I I really like that. And I'll say something a little bit controversial, but might not sound controversial to some people. I like putting inflation at zero. Which from most investment stance you don't do. But I'll tell you why. Because what I want is a real accurate representation for like investment. And so if you think about what return do you get in the bank? And you might go, oh, I'll get 4% in the bank. And it's like, no, if inflation is 3%, then you are gaining 1% a year by having it in the bank. But most people, when they're thinking about their bank, they don't think about the impact of inflation. And so when like when you think about adding inflation to all of your metrics, because some people go, yeah, but you haven't adjusted for inflation. It's like, yeah, but that's for everything. So when people you go, oh, property on average doubles every 10 years, or it's actually more like 12 years, but it's like every 10 years, and it's like, okay, yeah, but you haven't adjusted for inflation. It's like, yes, but that's every single investment. Imagine going in the bank, you get 5% a year and it compounds to this. It's like, yeah, but if you adjust for inflation, you make an average of 1% a year in a bank. So, yeah, for me, whenever I'm actually running my numbers to get like for like, I take inflation out completely.
yeah.
And I do that for a comparison metric. And then if I'm looking for a real net return, okay, net return, that's when I add in inflation to adjust for it. So I'm sort of like, this is real.
Okay. By the way, if you want to do different scenarios with and without inflation, you can click on the manage scenario settings. No, sorry, not on that. Um, or yes, on that. Yeah, yeah. So yeah. Sorry. From here, you can add new scenarios. So you can do scenarios without inflation and then factor them into your analysis. So you can create your own scenarios, not just the best case and worst case if you want to do and try different things. Um, all right. Another thing I wanted to show, and perhaps we can speak about it, Jamie, is the postcode information. So on our premium plan, you can get unlimited postcode information searches. So first, you can see some facts about this area, how many properties are now up for sale, the average monthly sales, the turnover, the average yield in this postcode, the capital growth, also average price per square foot and more. And then you can see the different metrics. So you can see actually the chart of the capital growth in the last 7 years. Um, you can see statistics about rental income based on the property type. You can see the average asking prices right now in this area. And you can see comparables, which is very valuable. You can see recent comparables based on property type. Um, and then you can get some information about the council taxes, the local crime, elections, schools, age distribution, commute method, and more. Jamie, I will ask you, what is more interesting for you to like when you look at on a postcode?
So I like some interesting things. So first of all, schools. I really like good or outstanding schools, and I'm kind of looking at like what's within a couple of miles. So within a 10-minute drive max, and I'm looking for two really, in those areas, good or outstanding. So this is a great example of that. I look at the age in the area. You
Oh,
know,
mhm. Why?
age.
Because of the rental demand?
Yeah, rental demand, but also to look at the potential growth in the area. And so really, if we've got an area where it's mainly 30 to 50-year-olds, then it's a really good indicator of future growth in an area. Whereas if the bulk of people living there are 65 plus, which a lot of areas are, where it's unlikely there's going to be as much growth because those people aren't moving and buying and things like that. And so I like to see that. Um, a good indication of wealth is percentage of car drivers in an area. Anything above 25% um, sorry, with car drivers outside of at home, because you'll see the huge bulk of that is at home.
Yeah, yeah.
And yeah, that's to do with work, by the way, which, by the way, when there's 48.7% people working at home, and a lot of that is to do with the commute, often that means they're white collar professionals. So that's really cool. And another one, I don't know if Lendlord has this, but would be cool if you're able to look at this, is the average household income.
You know what? Let's do a try. I cannot promise it will work, but because as you can see now, Landlord AI is now looking at this specific deal. So we can ask basically any question about the deal and about the postcode. So let's ask what did you want to ask?
What's the average household income for this postcode?
Just in case I will give him the postcode again. Let's see. And I want to remind you all that this is like still like in beta. So yeah, let me see. So we will continue to improve it. Perhaps we can change a bit. Speak average. Oh, 1 second. Let me go back to the deal analyzer.
Yeah, so maybe that's sort of something that develops over time in there. But I'll tell you why that information I find really interesting is it's because of affordability. And if you think about the average multipliers and average value of a property versus household income, you're talking about 8 to 8.5 times average household income
Mhm.
across the UK. Whereas in my areas that I invest, the what I'm looking at investing in is an average of 5.5 times the price. And what does that tell me? Well, it doesn't mean suddenly they're going to go up to that 8.5 times household income. But from a logical affordability point of view, I want to make sure I'm investing in locations where affordability isn't going to be the restricting factor. And so if the UK average is let's just say it's 8.5, just as this example, at 8.5 time, the purchase price, the value of the property is 8.5 times your household income, but mine are 5.5 times, then there's logically a bit of growth there, which I really like. But yeah, the final thing I like looking at is the crime rate.
Oh.
Um,
Mhm.
and crime rate's really a good indicator. I'm going to tell everyone because I know most people, once they get premium feature, are going to search their house where they live. I'm going to tell you right now, do not worry. There's crime in every area. There is crime on your street and a lot more than you think. So do not panic about it. The highest crime areas are actually student areas, believe it or not. And the reason for that is where else are you going to get five iPads, five TVs, and five laptops with the front door unlocked all the time, right? So crime's a really good indicator for me, and it's more about what the type of crime is in the area. So, are there like a ridiculous amount of break-ins and things like that? But that's 6,000 and amount of crimes 1,000. Believe it or not, that is towards the lower end. That is an average crime area in there. And it is kind of it's quite sad saying that, to be honest, 1,000 per 6,600. But in the UK, that's pretty average. Even high crime areas, it wouldn't put me off it. It then goes, what types of crimes,
Mhm.
are going on? But crime's a really good indicator of the wealth in the area as well. Um, and so,
Okay.
yeah, things that are important to me.
Good. So any deal that you analyze with Lendlord, you will have the postcode information tab available here, but you can also go to the postcode information directly from the menu and type any address or any postcode you want and explore the area. This is available for our premium users. So the basic plan will get only 3. If you want more searches, you need to upgrade. So perhaps, Amir, you can put again the promotion code you have by the end of this webinar time. Go to your settings page. On the plan details, click upgrade, then click add coupon, enter the value Jamie 03, click apply, and you will get the annual plan only for 50% off, 49.5 instead of 99 for the entire first year. We have also great features on the manage section of the platform. On the manage section, you can manage your existing portfolios. You can manage tasks. So the platform will create reminders for you to renew your gas safety certificate, midterm inspection, landlord insurance, mortgage products, and more. And you can add also tasks by your own and get alerts. You can also see it in a calendar view. My Documents is a place to manage all the documents that you need to keep for each property, for each owner, for each company. And on our premium plan, you have unlimited documents. And you can also share package of documents. For instance, if you want to share a package of documents with a potential buyer, so I just need to select the property, select I can also include some details about the properties, and I select the documents you want to share, click create package, and then the platform will create an HTML page with all the documents, and you can share it with others. So they will receive this link for the time length that you define, for instance, for 12 hours. So they receive a link, they can download the documents that you share with them. I'm doing it quickly, but we have a lot of content in our YouTube channel if you want to get more information. We have the wealth tracker, so if you want to add other assets and liabilities and generate a report, you can do it. The mileage tracker is a great place to track business trips and generate a report. This is also part of the premium plan, which you can get with 50% off. The benchmarks, yeah, this is something that you can compare your portfolio with other, basically with aggregated data of other landlords all around the UK in terms of your LTV, your cash on cash. This is the return on capital deployed basically, and your average interest on across all of your properties. The My Tenants section this is the place to manage your tenants and tenancies, track your rent collection, invite your tenants to their own dashboard so they can communicate with them. You can share properties with your tenants. The accounting module, this is the place to manage your cash flow over time. On our PM plan, you can link bank accounts and auto-reconcile transaction. Jamie mentioned the AI features to automate the reconciliation. This is available for premium users, so you don't need to reconcile the transaction every time. The platform will do it for you, and then you can just review what the platform did. You can generate P&L reports, expenses breakdown, income breakdown, and export it to a PDF or Excel spreadsheet. The interactive report is a report that you can see in a high level data and metrics about your portfolio, and then you can go property by property. So as you can see, you have so many features. Some of them are premium features, which you can get with 50% off during this webinar time. And the last thing I will show you is the finance section. So here you have the mortgage, remortgage, live feed for mortgage products. You can also get mortgage illustration to your Lendlord account and submit the application in a digital way. Bridging finance, you can get bridging finance terms using Lendlord in the digital way. Now we have on our platform products that offer free valuation, so you can also check this out. And also insurance, if you want to get a quote for insurance products, also you have it on Lendlord. So our mission was to create a one-stop shop for landlords and property investors, so you can source properties, analyze the potential return, and then after you purchase the properties, you can manage everything on Lendlord. And when you need finance, in one click or in a few clicks, you can get the finance you need. So, and now with AI, you can do more and more things, and we'll keep enhancing the platform. Yeah, Jamie. So I think we can go to the questions and answers, I believe, and then we can discuss more things, perhaps. We have, I think, 10 minutes. So let's start. We can try now, perhaps, if you want to speak, just raise your hand on Zoom, and we will open your microphone so you can ask the question. So if we have people that want to ask the question, please feel free to raise your hand. If not, we will just read the questions from the chat. We'll give it 30 seconds.
Aviram, if it's okay, maybe I'll also just ask some questions. People have been waiting a while to get some answers.
Yeah, of course. Yeah, go ahead.
I think it's just a few quick ones.
Yeah.
There was first of all, Jamie and Aviram, thank you so much. It was so insightful. It was really great to listen. So it's really nice, really fun. So there was a question about the recording of this session, how to get hands on it, where it's going to be posted.
On our YouTube channel. Basically, we publish all the content on our YouTube channel. I think in this, we'll take the opportunity. Jamie, perhaps you can also share on the chat where people can get. So I believe but Jamie has a great YouTube channel. They publish content constantly, great content, relevant content about property investments, about the market. So I urge you to subscribe to this channel to get this information. We learned a lot from this channel. And Jamie, I don't know if there are any other ways that people can reach out to you and your team. Also, you can share it on the chat, and perhaps you can, speak about it in a few words.
Yeah, sure. So, three main reasons people reach out to me is number one, just for some general advice. And if that's you, Instagram is probably best. That's where I reply to people. So it's just Jamie York Official, and it will have the tick next to it. So you make sure that's me. So for general advice, that's good. If like actually messaging me, if it's like you just want to inform yourself and just learn as much as you can, then YouTube's going to be really good. I post a lot of information on there, and I base the content around what questions people are asking. So I don't build my YouTube channel around how many subscribers can I get or anything like that. I build it based on what I think will be valuable for my subscribers. The other two reasons people get in touch is I own an education company, and for those people that actually want to get educated by people doing what they're educating, you can reach out to me on Insta and just let me know you want to have a chat with one of my team. And yeah, or for helping you build your portfolio. So we have one of the largest sourcing and portfolio building companies in the UK, and we do that completely hands free. So they're the sort of services I do. But honestly, if you just want to have a chin wag with me, then Instagram's best, Jamie York Official. Try and help you as much as I can. If not, and you just want valuable resource and content that will help you, then YouTube's going to be great for that. And you can just type Jamie York and I'll come up.
Amazing. Amir, any other questions? I believe we have some. Wait, we have uh one attendee that wants to speak. Let's try to. Amir, I will let you ask all the other questions. No worries.
Perfect.
Yeah. So people that just connected live, uh, they have the name Sarel Cohen, so it's not the real name, but okay. In the meantime, Amir, you can ask.
All right. So there was actually a long conversation that was happening in the chat while the two of you were talking regarding something that you spoke about, Jamie, which was from what I understood, basically you buy a property with your own capital, basically investing or creating your own loan, and then when you pull out that capital, you're not going to be paying any tax on that. So there was a long conversation about this. If you would be willing to elaborate on that for a few minutes, I think that would be really great for some people here.
Yeah, I think I saw some of that convo where it's basically like, so, when you refinance and you pull it out, it's tax free, but how is it tax free? Because it goes to a limited company. And I think that's the conversation you were talking about, right? Um, and yeah, so first of all, there's a couple of things to consider. So number one, how did the money get into your limited business in the first place? Well, usually, let's say for example, I've got 100,000 as Jamie York, and I've got 100,000 that I've built up over time in my job, and Jamie York has 100K. Now, a majority of the time, if I've managed to save up 100K, not all of the time, but a majority of the time, I'm going to be a 40% taxpayer as an individual in the UK. And if I'm a 40% taxpayer in the UK, owning properties in my name, my personal name, probably isn't going to be a great idea. Obviously, everyone talk to an accountant. This is not financial advice. But almost definitely, I'm going to want to own it in my limited company. So I'm going to set up a limited company to buy properties in a limited company. And almost everyone that I know buys pretty much all of their properties in their limited company as investments now. But you have to remember, when I put my 100,000 into that limited company now owes me as an individual that money. So hopefully this is making sense for people. So now, yes, my limited company has 100K to invest. But when I invest that and I refinance and pull that money back out, first of all, my limited company doesn't pay any tax on that because it's debt release. And any future debt releases, it pays 0% tax on because it's not profit as such. It's a debt against an asset. And unless they completely restructure how they do business in total, they can't just, this is the good thing, they can't just change it for property businesses. It would have to be across the board. It's tax free. And that 100,000 from the limited company is still owed back to me, Jamie York, right? So I can pay that 100K back at any point in time and do that. Now, a couple of nice little tips and talk to your accountant. I can also, because I've put that 100K as a director's loan, I can charge my business some interest on that. So my limited company will also owe me some interest, and there's a lot of tax benefits to do that. Number two, if it's a functioning business and I'm actually involved in it, I can live as much as possible through my business. So instead of paying me money and paying tax in it in the future, I can live through my business. Okay. On top of that, finally, A limited business can loan individuals money as well. Now, if you pay it directly to yourself as an individual, you've got 9 months to pay that back. Otherwise, there will be some tax due. But you can loan it to individuals, say your partner and things like that. And there's a lot of legal tax loopholes. And remember, tax avoidance is perfectly legal in the UK, absolutely legal, and I actively encourage it because paying tax is good, but pay the amount of tax you need to pay, not advertised rates, as it were. Tax evasion is illegal. So, can you never pay tax ever if you want to take 100% of the money to your personal name? No, no, you can't do that. But there's a lot of legal loopholes to not be paying tax. And remember, the big thing is, where did that money come from in the first place? Hopefully that helps.
That was amazing. Makes a lot of sense for me for sure. So Abhiram, can I ask another few questions, or are we going to let some people chat?
Yeah.
All right. So there's a question about what the usage regarding the usage of the platform in other places that aren't UK. So also about Scotland. There was a question here about America. If you could speak about that for a moment.
Yes, we do have, like, if it's outside the UK, we do have version of Lendlord for Canadian investors and for US investors. It's linear because there is no, for instance, all the finance options you will not find there, also sourcing options, but you can use the deal analyzer, the portfolio management, the tenants management, and we do have many users in Canada as well. Our main focus is the UK, but if you are a Canadian investor, you can create a Lendlord account with country Canada and then or US, and they will get it. Scotland users, we have many. I know that not all the sourcing and also the finance products always match to their needs, but I think there are many functionalities for Scotland as well. Yeah, so basically, and I see also before we jump to the next question, I see a question about upgrading to premium on the host and panelists as well. So perhaps I will just show it quickly.
There was a question, where is actually the place to add the coupon itself?
Okay, so I will show it. Before, Amir, we have the link here. I put it on the chat. So if you want to speak about our team, about mortgages, bridging, about like a demo, about how to use the platform, or if you want to apply in a digital way to get terms for bridging or to get a bridging, sorry, mortgage products from various lenders, you can apply as well using this link. So you have it on the chat. Now I will show quickly how you can apply the coupon code for this webinar, 50% off, and you also get an early access to our AI new feature that, as I mentioned, it's a beta phase, but you can do many things with it already now, and we'd love to get your feedback. I will show like one more thing about the AI on the on-market properties. You will have this icon summarize with AI. So you can get a summary of this property and you can ask follow-up questions. And as Jamie, you mentioned, like in the future, hopefully in the near future, we'll be able to also to phrase the email. Actually, I think that we've edited it here. So you can phrase an email to the agent to express interest in this property. And then, so currently you just copy paste, but at some point we will link it directly to the exchange, and then you can send it over. Okay, so let me show you how to apply. So go to your settings page or click on the link that Amir put on the chat, click upgrade. Then on this window, click on add coupon, enter the value Jamie03 and click apply. Because I'm in QA, so in the test environment. I will do it again quickly. Settings. upgrade, add coupon, Jamie03 and click apply, and you will get the 49.5 for the entire year for the premium plan. You also have some benefits with our finance products, so it's very valuable. So feel free to upgrade. Yeah, do we have any more questions?
So, sorry, there was a question here regarding, maybe you could just show really briefly regarding the video tutorials, how to see video tutorials in different places on the platform, as well as the AI tool that we could basically, where there's the articles where you can message the team and get some help on the platform itself.
Yeah. So on the top right menu, you have the video tutorials icon. So on each page, in each page, you will see videos related to this page, training videos. And on the chat bot here, it's not the AI bot. We do have AI integrated to our support as well. Here you can message the team, you can ask questions, you can report bugs, and you can also use our support center. So if you click on the help icon, you will see articles on how to get started with Lendlord, and you can find articles about the invest part of the platform, the manage, and for instance, if you want to know how you can add bulk payments, for instance, you will have an article explaining how you can do it. So you should have all the support you need, and you can also subscribe to our YouTube channel because we do publish videos and content from time to time.
Perfect. So there's I think a final question on my end regarding interest rates on Lendlord. So how can someone find out what the interest rates that Lendlord provides are?
So as I mentioned on the finance section, if you go to mortgage remortgage here, you will find the recent rates for mortgages, and it's linked to your account. So if you own more than more than 3 buy-to-lets, perhaps there are lenders that will not be able to lend you, or they will stress test your portfolio. So Lendlord is doing all of this in the background for you, and then you can find the lenders. You can sort this table by the rate, but you can also take a look on the total cost because there are also fees, and there are products for 2 years, there are products for 5 years. So it's not just the rate, you need also to take a look on the fees. So you have all the products here. And if you want to get more information, you can start a digital process to get a mortgage illustration with entering some details about the case, about the property. On bridging is quite similar. Go to finance, bridging finance, and complete this quick questionnaire to get terms, and then you can see the rates and the fees in the terms.
Amazing. Another question just came in from David regarding what we're talking about. What are the coupons you can apply to the mortgage application? How do you receive them? So maybe that's the discount here on the right side of 495.
Yeah, so now we are like, for bridging, we have now products that offer all products like free valuation. And there are provide a special companies that can provide coupons to their customers. But if you're interested in applying and perhaps we have a coupon available, just reach out to the team, say that you were in this webinar, and we'll see if we can do something.
Nice. All right. So those are all the questions on my end from what I've seen. Yeah. So yeah, back over to you.
Okay. So Jamie, you want to summarize this webinar and speak about, like basically last words from you?
Oh, sorry, I put myself on mute there. Yeah, sure. Well, first of all, let me know in the chat, everyone. Hopefully, you got a load of value tonight. I really love doing these, just trying to sort of do whatever I can to sort of help people. The one thing I would be saying to people on here is just with whatever you're looking to do in property, don't wait. And this isn't a big pitch. I don't get anything from you taking action. But it's you need to push yourself. The opportunities that are around over the next 12 months are staggering. And specifically the window of opportunity that's coming up over the 6 months. Those people, I've been chatting to a few investors the last couple of days, so have my investment consultants. And when somebody is like consumed by fear, and don't take action, you know what opportunity they're about to miss out on over the next 6 months. So turn up to things like this, get educated so you can feel well informed to make decisions. And when you utilize things like Lendlord with the tech that's available, failure is heavily mitigated. So push yourself out of your comfort zone and just take massive action in 2025, because I guarantee at the start of 2024, you were like, you know what, I'm actually going to take action. And then you got to the start of 2025, you've went, you know what, this is the year that I do it. And it's already getting to the end of March. So stop waiting, get involved. And honestly, I don't want to be rude to anyone, but anyone that has stayed this far and hasn't taken advantage of the ridiculous, like I tell Avi all the time, like he needs to increase his prices dramatically. The best alternative I found, by the way, was £200 a month, and it's not even doing half of this. So Avi, I'm gonna say it again in front of everyone: you need to increase your prices. But genuinely, Avi's game plan is the big valuation, of all of the stuff that comes in this in the play. So, and his big thing is add as much value to people for the lowest amount of money possible. And and it's a really good approach. But seriously, if you're sat in the fence about investing 50 quid to genuinely have such cutting edge competitive nature, and that's worrying you, you've got bigger concerns when it comes to investing in property. So I genuinely think it's a game changer, and the reason why I put so much effort into sharing the message of Lendlord is I really think those that are on Lendlord versus those that aren't in a year or 2 years time, it's going to be a very different type of investor. So yeah, I'm really excited. Hopefully everyone got value from this, and I'm excited to see the future of Lendlord and its development with a sensational team of engineers in the background.
Thanks so much, Jamie. Um, I really enjoyed this webinar. I think it was very valuable. I always love to hear your thoughts and like from like to learn from your experience. So thanks, Jamie. And we should do like I think like we have another webinar by the end of the year. I think somewhere like in September, I think. And thanks everyone for joining. I will keep this session open for the next 2 hours. If you want to upgrade, still like try to use this coupon code and upgrade to the premium plan. And again, just go to your settings page, click upgrade, click on add coupon, enter Jamie03, and then click apply, and you will get the premium plan. And then don't forget, you get an early access, which will be available on Sunday to the new premium users, to the Lendlord AI. It's a great feature. I know that during this webinar, we just, touch it briefly, but you can do many things. You can query your account. You can phrase texts and emails. You can summarize deals, properties. You can learn about things, and you can compare different properties and different analysis. So yeah, so if you subscribe to the premium news webinar, you will get an early access to this AI feature. So thanks again. Thanks a lot, Jamie, again. Thanks, Amir, for moderating this webinar. I will keep this session open for people that want to upgrade. So thanks, and we will see you in the next webinar. Good evening, everyone.
Bye. Thank you, everyone.
Yes.